How to become an investor in today's real estate market. Hi everybody, I'm George Chukola with Terry O'Connor Realtors, and today I'm here alongside Amy Martinez from Asset-Based Lending. And Amy is my guest today, and she's going to talk about the steps that you need to take so that you can become an investor in this real estate market. Amy, thanks for coming on with me. So Amy, give us a little bit about it. What do we need to do in order to make sure that we got everything in line?
Thanks for having me today, George. I really appreciate your time. I want to tell you first a little bit about myself so you can understand where I'm coming from.
Yeah.
So I am an AVP for, as noted before, Asset-Based Lending. We are a local company that is in 30 states currently, but based in Jersey City, New Jersey.
Okay.
And I currently reside in New York, so that is kind of my territory is the tri-state area.
Awesome.
I have been in financial services for the last 15 years or so.
Cool.
Touched a bunch of different areas of financing, and most recently have been involved in the private hard money space and only work with this company with residential real estate investors for business purpose lending.
Yeah.
So I'm also a real estate investor myself, so I've been doing that since about 2018.
It's important. You gotta know the business that you're investing in.
Yes, exactly. So I have the experience both as the consumer and on the lending side, and then in multiple other aspects as well. And I also do a really good job of networking with good people so I can have the knowledge I need.
Absolutely. Network's the key.
Networking is key. As mentioned before, we do business purpose lending for all residential investors in those 30 states, and we focus on 1 to 4 families, multifamily being 5+ units. We also do townhouses, condos, and some mixed use. So pretty much anything that has a residential aspect to it, but non-owner occupied, that's what we're going to learn about.
Cool.
All right.
So get into it. Let's talk about it. So what is it that people watching today need to do in order to prepare themselves? I mean, especially during the way that the market is going right now, I think real estate investment is a big thing that a lot of people are interested in and just don't really know where to begin. So it'd be great to hear from you as to what they need to do to get here.
Perfect. So one of the things I love is not only working with experienced investors, but also people who want to get into the space. Right. The education side of it is exciting for me, and I also like to see people get their first deal done. So both sides of that coin.
Me too.
Yes, exactly. But there are a few things that I usually recommend that people do ahead of coming to an institution like mine to get a financing, financing a loan. If you could do it all cash, good for you, but most people can't, so they lean on resources like myself. And what I'll do is kind of walk you through a few of the things that I would suggest in order to do that successfully. Just as a quick side note, the types of lending programs that we do are a 30-year fixed for people who are looking to just hold that property and rent it out.
Okay. But
then on the short term, we will also do fix and flip, which basically means you buy a property and you get financing to also help you rehab it. We're going to do ground up new construction as well. And then we also have a short-term loan that really doesn't have any rehab related to it, but it's basically for various reasons people need short-term money and not a 30-year loan.
Makes sense. Yeah, there's all different challenges that people face, and so it's nice to see that you have an arsenal of different things out there that can help fit the needs of what you guys are looking for.
Yeah, absolutely. So my first question that I always ask is, you want to invest in real estate, right?
They do.
Now what? Yes. Me too. I am, but I want to do more. So now what do? You've done this before. I always say the very first thing that you should do is learn the lingo.
Okay.
So there's some phrases that you're going to hear.
Lingo. I like it.
Lingo, yeah. Where does that come from? Do you know?
No, I don't know. I don't even know.
Me neither.
Probably a Latin word.
Yeah, most of Latin are great, yeah, right? Yeah. But anyway, learn the lingo. It sounds good when you say it, LVL. There are some phrases that if you're not familiar with, you're going to get lost right out the gate when you're talking to people, especially financial institutions. So it's good to have an idea of what those are so that you've educated yourself, but you also don't sound like you completely don't know what you're talking about.
You're probably going to tell me some things that I don't know about too. So
great. Please. I love it. Perfect. That's exactly why I'm here. So one of the ones I would mention is LTV, stands for loan to value. Okay. It's going to be the amount, it's a ratio basically of the loan compared to the property's value, or if you're purchasing it, the loan compared to the purchase price.
Okay.
Another one is ARV, that stands for after repair value. Generally comes into play when you're doing some sort of rehab. So it's going to be what that's worth after that's complete. And that's a really important number to understand when you are doing some sort of a fix and flip construction.
Totally makes sense. Yeah.
DSCR stands for debt service coverage ratio. It's a little bit more complicated, but I like to say if you're familiar with DTI, which is another word I like to talk about, DTI and the personal side of things, it's kind of like the DTI on a property itself. So it's the ratio of how much income is coming in on that rent compared to how many expenses are going out.
Okay.
And generally, we like to see as a lender at least that be 1-to-1.
Yeah.
But a good investment is going to be something that's at least 1.2, so 120% of income compared to expenses.
Okay. Yeah. It seems like it's in line with most things, right? You want at least 20%, right? Extra.
Yeah, you want extra because most people do not get into real estate in order to just break even. There's not really a benefit there. So.
No, and if you do, call me because we'll get you out.
Yeah, exactly. We'll talk about some alternatives there. Maybe something better you can do with your money. So yeah, DSCR is really important to know, especially when we talk about the 30-year fixed loans, because that's going to be the ratio that's calculated, and it's going to really help to determine whether or not you can get it, and also for your own sake, whether or not it's going to be profitable.
Okay.
And then part of that that's going to come into play is the word cash flow, which a lot of people say, oh, that makes sense. But you want to think cash flow in this regard as where after all the expenses are paid, the rest, in your opinion, should be cash flow. So that's going to go, it's going to flow back into your pocket somehow. And so cash flow is basically when people are talking about it, like, does it cash flow or does it not cash flow? That's kind of where that lingo is coming from.
Okay.
The word cap rate is specific to commercial real estate,
right.
but it does come into play when you're talking about these types of loans as well. They are dependent on the market you're in. So if someone starts talking about cap rate, it's really going to give an indication of how well that particular market is doing.
Okay.
It has to do with operating income, value, etc. Amortization.
Oh, the amortization. That was the amortization table that I had to learn in real estate school.
Yes, that is a fun word. Not so fun when you look at it on paper because you pay a lot of interest and it's not pretty.
Over time.
Yeah, but basically that's the process of paying the loan over time, and that time can be different depending on the loan, and it has to do with your payments and the length of the loan.
Okay.
Prepayment penalty is a really big subject right now.
Yep.
Not all loans will have prepayment penalties, but if you do, it basically means that if you were to take out financing and to pay it off early, there's usually a percentage of that loan you pay in a penalty.
Right.
Because essentially what's happening is the person giving you that loan is kind of banking, literally, on you having that there in their investment portfolio, making those payments. So if you take it out of their portfolio sooner rather than later, they're not making that money like they expected. So they don't want that to be easy for you.
Makes sense. Yeah. I mean, it's not, it kind of stinks, but I mean, obviously I get it, especially if you're lending and it's part of your own portfolio and you're projecting those numbers, it totally makes sense.
Yep, exactly. So the reason why that's a big deal right now is because interest rates aren't as great as they have been.
Right.
And so people are thinking in the back of their head that as soon as they go back down, whenever that may be, are we going to get pooped on?
No, we're not. It almost came back.
I heard a bird and I was like,
we're good. It came back over your shoulder.
We're moving towards a blooper here. It's all right. It'll make for good television.
Yeah, good shot.
I'll bring it on. I have wet wipes in my car.
There you go.
Good. Oops, so we're covered. Anyway, back to prepayment penalty. So a lot of people are thinking if they get into a high rate now, then they could possibly refinance when the rates go down.
Yeah.
Whether or not that happens anytime soon is yet to be seen. However, that can be a play when you're trying to figure out if a high interest rate is worth it now or not. Points is really important. That generally refers to some sort of an origination fee in some regard that's going to either help you get the loan, or in some cases you'll pay points to get maybe a better interest rate, etc. Sometimes you'll pay more points if you're more of a risk than you would if you weren't.
Makes sense.
And then the interest rate seems pretty simple. And on the investment side of things, it's important, but not quite as important as maybe if you were going to get your primary residence and you're thinking about your month-to-month expenses there. Interest rate is just one of those factors you want to keep in mind. You make sure that it doesn't negatively impact your cash flow. So it's important, but it's not going to be the number one thing people look at right now, especially when you're in investment. Especially because they always say what? Date the rate.
Date the rate and marry the home.
Yeah. Yes.
That's it.
Yes.
Date the rate, marry the home.
Date the rate, marry the home. Exactly. And that can be, that we say that in investment lending as well because it's just as true. All right. Closing costs, if you're not familiar, that's going to be what you pay at the table. So you want to find out what that is and what those entail. That usually includes third-party fees like appraisal, title, attorneys, insurance, etc. Collateral just basically means the subject or the property that you're lending against.
Okay.
And then two other things that aren't necessarily part of an investment loan always, but to know are DTI, which is your personal income to expenses, and then global cash flow. In some cases makes a difference, and that's where you're going to look at more than just the asset. You're going to look at the cash flow of the borrowers, all their businesses.
Okay, so if there are investors and they have a portfolio themselves, you'll take into consideration the entire portfolio.
Yes, some lenders will. We don't look at, I personally don't look at global cash flow, but you want to be familiar with it in case someone says, hey, we could look at that and know what they're talking about. Again, this is just to be aware of what people might say and what might be run.
So, all right, that's great for the lingo part. But now, guide us through the steps. Like, what are we going to do to prepare ourselves? For somebody who may not know where to even begin, what advice should you give them to really get the ball rolling with this?
So let's say all that's in the back of your head, or at least you have a decent understanding of that, which you can do online in your spare time, sitting on your phone doing nothing. But the things that are going to take a little bit more effort, I really think that are important, is starting with building your team. And I preach this a lot. I don't think people think about it necessarily as one of the first steps, but I really believe that it's essential to being successful, especially if it's your first time.
Okay.
And the very first person that I would start by interviewing and getting on your team is your real estate agent.
Oh, I think I know one. I
don't know. I know this guy, George, but I don't know if you know him or not. He's really good, and so definitely would interview him first so you don't have to go anywhere else.
Yeah.
But your agent is going to do a lot of things for you. They're going to have their pulse on the market. They're going to have an idea how to pull comps for you if you're looking at that after repair value. They're going to have access to the MLS, which is going to give you those resources as well. They're going to tell you what's happening around you, what things are being sold for, what's more popular, et cetera, et cetera. So that's your very first step, in my opinion.
Absolutely.
Locking that up.
I always say too, I think there's an unpopular opinion that real estate agents, they don't really do much during the transaction. I would have to disagree. I think a lot of the work is going on behind the scenes, and a lot of people don't see every day what we do. So it is important. And if it's not me, just make sure that you have a great agent, somebody that you can build a great relationship with, because it is very important, and especially somebody that's got a ton of communication and will keep you in the loop during the entire process.
Yeah, absolutely. And as much as I like to say that real estate agents are going to be your best friend, sometimes they're not. So always keep in mind that if you are working with someone already, you can fire them and find someone better. Close your ears.
Stop.
And I'll put that out there.
Yet,
now, I didn't say him. I said if you need to fire your current one, you've got somebody. I'm just saying, you're not stuck. That being said, there are a few other people I'd get on your team. A good second would be your real estate attorney.
Absolutely.
That's going to be someone who can help you understand the legal jargon and get you to the closing table, protect you, etc. Also, when you're doing the type of lending that I do, it's going to be to an entity, so you're going to want to make sure your entities are set up properly. That you have someone who's ready to be there when you want to do your next project, and maybe you need a second entity, whatever that looks like. Someone who's going to be responsive and on your side. So definitely find an attorney, but find one that really likes to focus on real estate and be there for you.
I have a few good ones that I can always obviously refer out as well.
Yep, absolutely. That's a good way to find them too, is by talking to someone that you've already got on your team. Like, who do you work with? And
referrals. Yep,
absolutely. Following to that is going to be a title company. The thing I would kind of throw out there is that you can work with people who have their own title company, but you're not forced into it. So if you have an attorney, you can still shop your title company. So make sure that you've got both of them on the same page and that they're both responsive, because there are some times when things like title or insurance can make or break your transaction. So make sure they're good.
100%. And title insurance is necessary. Trust me on that. I can do another video on why title insurance is very important. But definitely the person that you work with title is 100% something that you need to do some research on and make sure that you have somebody good that's going to be in your corner.
Absolutely. And speaking of insurance, that's another person I would have in your corner is an insurance agent, because you're going to need insurance no matter what you're doing. If you're a flipper, if you're new construction, or you're just looking to be a landlord, insurance is key, and having someone who understands those technicalities. It's not your run-of-the-mill auto and home.
No.
When you're on the investing side particularly, there's more details that go into that. So find someone who knows what they're doing and has done it before, for sure.
Cool.
And then should you be in that rehab space, you also want to get in touch with a general contractor, especially if you haven't done a flip yourself. Don't try and do it on your own. Get some professionals to at least give you some guidance or help you pull permits or whatever it is that you need to do. It'll save you time and money in the long run if you find someone good.
Yeah. Please do permits. Please go get permits. Don't be one of those people that doesn't do it. It will come back to bite you.
It will. Well, we won't let you do a loan without the permits.
I know, but I'm just saying.
Yes, as a general rule of thumb, it's a really good idea to make sure that everything is on the up and up for everyone involved now and later.
Right.
And then at some point, you're going to want to find your lender or lenders. Some people have multiple of choice. But really, once you have these other people established, you've got a really good start on getting yourself out there. So that's what I would do definitely, is building that team.
Awesome. And so I guess, the other thing, like, what other steps, what should they prepare, or how should somebody prepare other than the team? Obviously, a team will hold your hand through the process, but just give them some insights from some people that may not know.
Sure. So just to kind of make sure we're on the same page, we've learned the lingo, we built our team, now we got to get our shit together, which is basically paperwork. And I can tell you that nobody at any point in time is like, yes, I get to do paperwork. I don't even want to do the paperwork, and that's like my normal day-to-day job. But super important, and you want to make sure that it's organized. So if you have found a property already, obviously you need your executed purchase contract. That's super important, and again, your team's going to help you with that. If you're looking to do a fix and flip or a new construction, one of the things that I rarely ever see done ahead of time, so this would make you look real awesome to your potential lender, is put together an experience worksheet. So whether that be this is going to be your first flip, so that's zilch, I don't have any experience, and you write that down, all the way up to someone who's done 10 flips so last year and getting them on paper. Having that ready to go is going to save everyone a lot of time and energy. And if you already have that, you're going to look like a superstar just putting that out there without being asked.
Yeah.
So that's the number two thing that I'd have ready. Again, we talked about having an entity. You're going to want to have that specific paperwork ready to go. If you've been given a pile of it and you don't know what it is, maybe go back to your attorney and have them sort through it with you so that you have that ready to submit as well. And then you want to do some market research.
Okay.
This is going to go back to your team again. You can use your attorney. You can use your real estate agent. You can even use the title company, general contractor. Really, all those people are going to have some tidbits and key information that's important for you to know. If you're going to be renting it out, what's the market rent? And how are you going to figure that out? I always say, what's your agent say? Exactly. Go back to your agent. Use them for the resources that they have for you, because that's part of their job. And it's good for them too. That helps them learn the market even better.
Without a doubt.
Yes. So market rent. Knowing what your comp is going to be done look like if you complete a renovation project in some way, or ground up new construction, you need to know what that looks like at the end.
Right.
So a lot of research is on the market side, and coming prepared with that information is going to wow the socks off of any lender and make you much easier to do business with.
Cool.
Meet with your general contractor if you've already found a property, and you're going to need to walk it in some way. Even if you can't get inside, walk the outside, see whatever inside pictures are possible, because you've got to do the best guesstimate on those repairs as possible.
Yeah.
So if you're doing a rehab, set up a meeting with your GC.
And find a GC that you trust too. That's a little tidbit.
Yes, definitely. Which you can do through referrals, which is why networking is super important.
Always key.
Yes. Something that's not actually mandatory, but I always recommend, is putting together some sort of a bio or a resume, just to kind of give a little story about who you are and what you're looking to do. Yeah. You could turn that into a business plan. That would be really awesome.
Mission statement or something too, what you focus on.
Yep.
Yeah, it helps.
And then even though with my type of lending, we do not ask for personal income, having an idea of what your personal finances look like, just even on what we call a PFS, is helpful, because it just paints a picture of the borrower that can be it's just much easier to see, like, this is what I'm dealing with, as opposed to having to drag that information out of someone. And then knowing your numbers. That's going to come back to all the things we've already talked about. But if you have a really good idea of those numbers ahead of time, your lender's going to feel a lot more comfortable doing business with you.
Obviously, so you can back it up with some numbers. It always makes it a little easier and smoother transaction to get you to that starting point.
Yeah.
All right, awesome. Anything else that you want to add? Was there anything else that you wanted to really discuss about, and when it comes to, I guess, maybe like knowing your numbers or anything like that?
So I have a cheat sheet list that I'd be happy. I'll share with George, and happy to have him share it with you if you're interested in getting it, of things to kind of know ahead of time.
That'd be great.
Yeah, like there's just going to be some certain things that if you have them ready to go, make everything easier. And it will probably spark some of that research that you needed to do if you didn't already do it.
Sure.
Just makes you an overall better picture to kind of have that information ready to go and faster.
Right. So reach out to me or Amy, and we'll get that over to you.
Absolutely. Then I also have some questions. So the person who's giving you money is going to interview you.
Okay.
All those things we talked about are going to be part of that interview in some way, even if it's really informal. But you really want to interview the lender as well. Like, don't go into it thinking that they hold all the cards, because it's still your project, it's still your asset in the end, it's still something that you want to do to be successful, and ultimately, everybody involved should want this project or even just purchase to go well.
Right.
So make sure that the person that you're getting into bed with, financially speaking, is also solid, especially in the market right now, right? We've seen a lot of companies, even banks, that have been like just shit in the bed, and it's not good.
It's not. And again, and part of the interview process too is also building a rapport.
Yeah.
Because again, it's so essential to have a relationship and a good foundation so that the transaction will run smoother, because you just won't feel uncomfortable asking any questions that maybe you don't know the answer to, or need help with getting obtaining documents. They can point you in the right direction. So it really does make a difference, and you really should interview that. The same way you would be interviewing for a job, a lender or even a real estate should be able to interview for the job of having you as their client.
Yeah, absolutely. I would say definitely get some information on paper, especially if you're starting from square one and you're going to like shop around, which is totally fair.
Yep.
You're going to want to ask about interest rates and points. You're going to want to ask about the loan amount and the repayment schedule. Are there any prepayment penalties? Super important. What's the lender's experience in this type of lending? How long have they been in business? Hopefully they didn't start in the garage yesterday, because that's probably not a good sign. But the process, how simple is it? Do the steps that they explain make sense, or do they sound a little bit like maybe they're giving you a spidey sense goes off? You're like, that doesn't sound quite right. Especially if you talk to multiple people, you'll start to develop that. But having them kind of identified at first is going to help make it smoother.
Makes sense.
Obviously, the collateral. And then a big one is hidden fees. Like, make sure that the fees and what you're paying for makes sense, that it's customary. And then never, ever, 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 I say this all the time, and yet some people don't listen to me, don't pay for anything up front. Until you have a commitment and you are this close to going to a closing table because everything else is lining up and there is a conditional approval, there should be no money going between hands. And now that's not to say you shouldn't pay for an appraisal at some point, and that might be before a commitment, depending on the lender's process. That's not paying the lender, it's going to the appraiser. If your attorney asks for some sort of retainer, I don't even know how that works. Okay, but the lender should never require you to pay them before they give you terms and or a commitment.
Right. Agreed. Totally agreed. Again, be careful.
Yeah, definitely be careful. I've had some people, unfortunately, lose a lot of money doing that backwards, and you just want to know where your money's going. I just warn people, it's not a good business practice. It's great for the people taking your money, but not great for you. All right, so I think I kind of got into most of the things that I would ask about when you're interviewing your lender. Again, I have a list, so if you needed to be like, hey, what should I be asking? I'd be more than happy to send it to George and you can pass it on.
Yeah, we'll help you through that. Again, I think also, referrals from agents also too kind of go hand in hand when you have a team. Most of the time, you can kind of refer back and forth, so it makes it easier just to know that your agent has a relationship with somebody. It really does make a difference.
Absolutely. So, yeah.
All right, awesome. Well, thank you. Thanks
Yeah.
for coming on. Thanks for
Yeah.
giving us some really great insight into what to expect and the steps to go in there. I appreciate you coming on and talking with us about it. And if you guys have any questions at all about where to begin, or if there's anything that you wanted to ask us that we didn't cover today, feel free to reach out to me or Amy. I'll put Amy's contact info inside of the comments as well, and you can reach out to either one of us.
Yeah.
All right. Thanks again. Again, I'm George Chicolo with Terry O'Connor Realtors, Amy Martinez with Asset-Based Lending.
Yes.
And we will see you soon. Take care now. Stay classy.